rate. So we are still very much in the weaker dollar camp for the balance of this year and maybe beyond, a kind of more secular downtrend built on a vigorous global recovery, very low US real yields, and also the exceptionally high starting point in terms of valuations and exposure to the US. Now, the big theme of the last week or two has been the return of US exceptionalism. So we attribute the rebound in the dollar to that, but it actually was also reflected in the rise of US real yields relative to, for instance, in Europe, which had some rather noisy influences, I would say. It was predominantly inflation in Europe rising surprisingly, and we think that's temporary. And it fits into that picture where we don't quite see a turning point quite yet, but we do think that dollar will resume its downtrend, and that still has quite a lot further to go.
And what would that mean for the Chinese yuan? And I know we talk a lot about the Chinese yuan, but you have an interesting... So I want your perspective on the yuan for sure. But I also want your view on the RMB CFET index, which is basically pegging it to some other currencies, emerging market currencies included. 24 currencies are part of that index, and you see a rise there as well.
Yes, I mean, when we look at dollar China specifically, the biggest factor is always the broader dollar trend. So in line with what I said about a renewed dollar decline, we do think that dollar China will resume its decline as well. We think that over time, 630 and 640 are certainly realistic levels. Right here, right now, again, the dollar is stabilizing, and therefore it's not an imminent further decline that we have in mind, but we still have pretty high confidence, including because all of the broader factors that were supporting the renminbi are still very much at work. Now, what does that mean in the context of a broader dollar decline? I think a decline in dollar China really doesn't necessarily translate into broader renminbi strength. That being said, we still see China as, on a structural basis, probably one of our most favorite economies. So over the medium term, even on a trade-weighted sense, we are still positive on the Chinese currency and investing in China more broadly.